You talk about the importance of, first and foremost, having savings that is not to be intermingled with investing, right? So this is like for a rainy day savings that in case the worst things could happen to you, you can survive. And a lot of experts talk about, 3 months, and I think, yeah, get to 3 months and then get to 6 months, then get to 12 months, and some people say even more than 12 months.
Totally.
So I'd be curious, like, what's the magic number? I know get started wherever you're at now, like just find a way to get to the next level. But where do you see that as ideal before people move into that investment bucket?
Okay, so here's my thought on it. Minimum 1 year is my recommendation for anyone and everyone. That's my recommendation. I personally am closer to a 50% allocation of our capital, which is a fairly big number, in that bucket. And here's why. What do you do with the money in the bucket? The reason why most don't put more in is because, look, I'm getting like no rate of return at the bank, and it's taxable. That's all fair. So what I do instead is create more of our own family bank. And you can do that through a LLC, like a Wyoming LLC, asset protected type LLC, with a brokerage account, money market at the bank, etc. I personally follow the infinite banking concept. I know Garrett, our friend, calls it cash flow banking. Same concept. The idea is using something that's been around for 250 years called dividend paying whole life with a mutual company, which, by the way, when I first heard this, I threw up in my mouth a little bit because I'm like, are you kidding me? I started in insurance. Like, I have a complete allergy to insurance. Well, this isn't for insurance. This is for a tool to practice how do you actually create a family bank. And I haven't found a better one. If there's a better one, sign me up. I'll do it tomorrow. It's the best option I have found. So because of that, I want as candidly as much capital personally as I can get in there, because long term, over 20, 30, 40 years, I'm going to average likely 3.5% to 5% tax-free, compounded in that. And what's most important to me is it's a company that I own. So it's like me owning the bank. I'm a shareholder in the bank. So when it's profitable, I'm getting those dividends sent to me on an annual basis. And most important, it's a bilateral contract of like-minded individuals, not like a bureaucracy like our government. So I have control of that company and what happens to the capital in it, and specifically my capital. So I can leverage that at any time without any questions, without any credit report. If I can't pay it back 1 year because there's a downturn in the market, there's no questions asked because it's my capital that I make the rules on. That gives me so much freedom and flexibility to do creative things with my money. 50% is what I do in my portfolio. Like I said, it's a pretty big number. I want more, but I cannot because they won't insure more. So I insure, my wife's insured, our kids, we have 4 grandkids, they're insured, I have team members, that are insured, but it's not the insurance that I'm after. It's the ability to get the growth at a very conservative, competitive number, and it gives me access to that capital. And remember, the key to this is what we started the conversation with, is 7th generation thinking. Think long term. The other thing that it allows me to do is I can now loan that out as a family bank. Kids, you want to buy a car, house, whatever, pay it back. If someone goes rogue and doesn't pay back, then you can't participate in the bank. We all pass away one day. Thinking long term, I'm thinking about their grandkids. That money's going to get paid back from a death benefit that goes back into the bank that generations from now are going to be able to benefit from. And by the way, with our work with our friend Rich, we have a family constitution set up where we're really clear on our values and symbols, traditions, and rites of passage to pass all that along. And then all this bank is doing is throwing fuel to that fire. So that's how I think about savings. Minimum 1 year, and then some people, I've heard Oprah wanting whatever her number is, I think 7 million. So we're all different, but I'm more than most traditional planners would say 3 to 6 months. I'm going to say minimum 1 year.